Alrighty, everyone, good evening. Welcome to tonight's webinar. Last night we talked about investing using the market scan tool, the investor strategies. Tonight we're going to change it over to day trading, maybe swing trading a little bit, really active trading for those who have some time to look at the market through the day and be a lot more active. Conceptually, it's a lot of the same things that we talked about last night. The primary difference is that everything is faster. And so here is a chart of a stock that was traded on Friday. And you can see it. You can see at the start of the day, we had it right about here at, I don't know, about 775, 780. And through the course of the morning, it went up to $10 and then went back down to 8.25 and finished the day at just under $9. So there's some stocks that have a lot of volatility through the day. You can imagine if you can buy it here and maybe sell it there or sell it there, you make pretty good profits quickly. But only some stocks are worthy of this. Most stocks, most of the time, are not worth trading, but some stocks are worth trading. We call those alpha stocks, and that's one of the things I'll talk about tonight. So the itinerary is, first of all, to explain what is day trading. I'll tell you a little bit about my background, how I came to be a stock trader, the details of my approach, how I measure performance, what my typical trading day might look like, what you need if you want to be a stock trader, what are the things that will help you be more successful? And if you want to learn my approach, my strategies, use my tools, I'll talk about that as well. And then at the end, we'll just kind of go through the economics of trading and the income potential. All right, so let's begin. What is day trading? We are entering and exiting positions within a trading day. So if we buy at 9:40 a.m. Eastern time and we sell at 2 o'clock p.m. Eastern time, then we have made a day trade. Typically, we are in cash overnight. The minute you hold a stock overnight, you're not really in a day trade anymore. Now it becomes a swing trade. So if we think about hold period, day trade is less than a day. Swing trading is from 2 days to maybe 2 or 3 weeks. And then position trading, which is what we were talking about last night, is 2 weeks to many months. So as a day trader or as a swing trader, we're focusing on stocks that are moving abnormally. They're actively traded. There's something going on there, something that has captured the attention of the market, of traders. And so we call those alpha stocks. And I'll talk about the defining characteristics of alpha stocks tonight. Now, generally speaking, I mostly buy, but we can short as well. I teach some short selling strategies. My algorithms work for short selling. For those of you that don't know what short selling is, essentially it's a way to make money from stocks going lower. And so you can make money whether stocks go up, whether stocks go down. As long as they're moving, there is money to be made. So this is my layout. It's actually my previous layout, but more or less the same. You can see I've got lots of screens in front of me. You don't need all of this. You know, I can day trade from a laptop. I often travel with a laptop and just trade from that. So what having all these screens allows me to do is maybe be a little more efficient. And I also run, webinars where I talk to my students through the day, teach them through the day. And so some of my screens on here are related to that. And of course, most people wouldn't be doing a webinar like I do. So I think it's quite helpful to have at least 2 screens, however. It just gives you a little bit more real estate to work with, to evaluate the market, monitor positions, that sort of thing. I think any more than this is overkill. I've seen pictures on the internet of people with 16 screens. And the problem with that is it gets really hard on your neck when you sit there all day and there's so much to look at left to right. It actually gets hard on your body to do that. And even this layout, I'm primarily focused on the center screen, which is my analysis screen. I've got things called radar screens in here that allow me to look at my algorithms. And this screen over here is something called my Active Live screen. So my students can subscribe to Active Live where you can watch this screen. So I'm watching that screen. My students are watching that screen. And that's what gives us our trade signals, our ideas through the day, is we have an algorithm running on all the stocks in the US, and it's looking for something very specific, which I'll talk about tonight. All right, so how did I get started? Well, I talked a little bit about this last night. I started trading the stock market when I was in university, but I was a little bit more of a longer term trader back then, maybe a swing trader, leaning toward position trading, I suppose. Trading back then was much slower. We didn't have the internet web-based brokers when I started trading. I used to phone into a broker. Imagine that. I'd actually call into a human and make trades. And for a little while, I tried trading the futures market because that's where most traders went, because the volatility was more. There was a lot more leverage in the futures market. And so I traded the S&P 500 futures for a little while, and I would phone in to a broker, and he would then call while I was on the phone. He had another phone, and he would call to the trading floor in Chicago and make a trade on the S&P 500. It was but by today's standards, very cumbersome. But back then, that was leading edge. To be able to talk to a broker while he was calling the trading floor in Chicago was really cool. I was a 20-year-old kid back then. So that's sort of my genesis. Now, along the way, I started to develop my own tools, my own algorithms, and really I was just scratching my own itch. I had developed a methodology that looked for stocks that were trading abnormally. I talked about that last night, and it's really no different for day trading. My first focus is on abnormal behavior, and I didn't have the tools. They didn't exist. Brokers were starting to come online a few years into my trading career, and they maybe had some basic stock charting, but there was very little in the way of scanning tools, of algorithms, that sort of thing. And so I just built my own. It took me probably 8 years to really be successful. I didn't have anyone to teach me. There were very few books about stock trading. There was a few books about futures trading, and there was certainly no one teaching courses or online education, because there wasn't online education. Now, I was a student in the finance program at the University of Calgary, but they didn't teach anything about trading. They taught maybe a little bit about long-term investing, but the methodology that they taught was pretty useless for a trader. And so I pretty much had to figure it out myself. And almost everything that I do today is self-taught. And it comes from spending thousands of hours looking at stock charts, analyzing the market, building tools, writing algorithms. I would say at least 20,000 hours of time has gone into what I know about the market and what I use today. I've been doing this for 30 years. So when I teach people, I want everyone to recognize that I didn't start doing this a year ago. I've been doing it a long time. I probably have more experience looking at charts than most people in the market, simply because I've done it from the time stock charting began on the internet. When I started, I was drawing charts out by hand. And along the way, a few years later, you could download charts onto software on a computer. And then eventually you could have them on a website. And in fact, I owned one of the first websites where you could get stock charts. And of course, today we still do that. We have Stockscores charts. So why do I like to trade? The number one reason is the third thing on the list here, and that is freedom. The beauty of trading the stock market is that you can do it pretty much anywhere, as long as there is an internet connection and power and you have a computer, you can do it. I've made trades from Starbucks many times. I have made trades from a mountain bike at the top of a mountain through my phone. So there's a lot of freedom. It is in my mind, the most challenging game you will ever play. And I actually treat it like a game. To me, it's kind of like a video game, and it's a lot of fun. There's a lot of flexibility. If I don't want to trade one day because I want to go away or something, it's fine. You don't have to. Especially with day trading, you can just decide that you're going to go golfing that day and not trade. You can also have flexibility around the time that you trade. The opening hour of the day is the most important day, and there's many days when I only trade the opening hour, and then I have my positions, I put in my stops, and I don't come back to the market until the final half an hour or so, when I can sort of tally up how the day has gone. And of course, then there's the financial incentives. Stock traders are the highest paid income earners in the world. The big, algorithmic trading funds like Renaissance or Citadel have made their owners billions of dollars. And so, and then you'll hear just about individual traders at institutions that could make $100, $200 million in a year. And there's lots of people trading from home making seven figures. Now, in this age, when we have a pandemic and COVID, the number of people trading the market has risen dramatically because so many more people are at home. Maybe people aren't able to do their normal job. And so we've had millions of new stock traders come into the market. Now, you might, at initial thought, think, well, that's a bad thing. Does it make it more competitive? And the reality is, it's not a bad thing, because many of the people that have come into the market in recent months or even the last year really don't know what they're doing. And they are emotional. They chase upward trends. They panic in downward trends. They make a lot of the mistakes that I made 25 years ago. They make a lot of mistakes that I teach my students not to make. And all of those mistakes are mistakes I have made. I don't want anyone to think I have not done this stuff and screwed up a lot. The reason I'm a good teacher and the reason I can talk about this stuff with a lot of knowledge is that I have made every mistake. I have had the same emotional attachment to money that most people have. I have had the fear of missing out. I have had avoiding pain of taking a loss. I have had all of that stuff. And I have had to cleanse myself of those emotional hangups. And in doing so, I've become pretty good at understanding why we humans do stupid things in the market. And a big part of what I teach is on how to overcome those things. So my approach to the market as a trader is that I am a strategy-based trader. I have rules for when to buy. I have rules for when to sell. I have rules for managing risk. I have a process that is very mechanical. I'm kind of like a computer. I have a computer doing most of the work. It analyzes 7,000, 8,000 stocks all the time through the day. It tells me where the action is. I follow that screen just as my students can follow that screen at the same time. And when I see a new symbol come up that's triggered what we call an action candle, I'll show you that in a minute. I then evaluate the chart, determine whether there's a trade there. Most of the time there isn't. Most of them we throw out, but every day we find a few. And my goal is to use these algorithms and use this very mechanical process to take out human judgment. I want to minimize human judgment. We humans are idiots with our money in the market because we have an emotional attachment to our money, and that sets us up for all kinds of failures. I've been talking about the market and teaching for 20 years, and one of my favorite things to tell people is that if you are a normal human being, you are predisposed to fail in the stock market. And a big part of what I teach is how to overcome being normal. So it's not just about the rules. I mean, having that mechanical process helps a lot. The rules are simple. I could write them on a napkin for the most part. But it's applying those rules without the emotional hangups of being a normal human being that is the greatest challenge. And so, again, a large part of what I teach revolves around that, about me taking the human out of you and making you a little robot. Now, those algorithms and the processes, those are a fairly recent addition to my approach. I mean, I always had strategy-based trading rules, but it's become way more sophisticated. And that started about 4 years ago. About 4 years ago, I took a little midlife break. Remember I said that one of the great things about trading is that it affords us flexibility and freedom. And so I packed up the family, or we packed up, and we moved to Hawaii. And we lived on the beach in Kapalua Bay and spent 6 or 7 months there. And I started working on algorithms because the stock market really changed dramatically 5 years ago. And it became much more competitive, much more fast moving. Computers really became a huge influence in the market. And so the old saying, if you can't beat them, join them. I really increased the computerization of my approach to the market. And there's still a human element, but it's largely computer driven with what we use in Active Live and different algorithms that I've written for a program called TradeStation, which I make available to my students and only to my students. So to understand some of the things I'm going to show you tonight, we also have to first understand how I measure performance, because I don't measure things in the normal way to say, okay, I bought a stock and I made 7%, or I bought a stock and I made $1,000. How I measure performance is in consideration of risk. I use something called the reward for risk ratio, which I'll show you in just a moment. Now, as I said last night, our number one goal is capital preservation. Above all else, we must preserve our capital. And so, yeah, we could be riverboat gamblers and maybe make a lot of money quickly in a fast-moving, strong market. But if we don't have good risk management, we will eventually go broke. And I've had interactions with people where they were kind of that gambler mentality. And I've seen some of them. I knew a guy that turned almost nothing into $20 million by riding a hot market, the cannabis market, just pounding in, no consideration of risk, but the market was hot. Turned his, I don't know, 100 grand, or I don't know how much he had, but not a lot, into $20 million, and then went right back to zero. And in fact, I think he owed money in the end because of bad risk management. So we want to always be thinking about taking small losses, letting our profits run so that they are outweighing the size of our losses, and don't put so much focus on success rate. Don't put so much focus on success rate. There is a tendency to think that you have to be right most of the time to make money in the market, but that's actually not the case. My strategies are right more than they're wrong, but they're not anywhere near 100%. 65, 70% is sort of what I strive to do. But I've seen strategies or know people that have success rates that are 10, 20%. And they're still able to make big profits because they have very small losses and then big profits on their winners. So overall, even with a very poor success rate, they can be quite profitable. So this is a chart that demonstrates the reward for risk ratio. So in this case, we had an entry signal on the opening 2-minute bar of the day. So notice up in the top here, it says 2 minute. So each one of these bars, which we call a candle, each one represents 2 minutes of trading. So this is 9:32 in the morning, Eastern time. The stock opened the day at $1.99, and 2 minutes later, it was at $2.04. It traded more volume than it normally trades. And this price jump in that opening 2 minutes was statistically significant. So it met the requirements of my day trader strategy. We look for something called action candles. And if you look really closely, you'll see a little pink dot there. There's another one here. And so we look for these action candles that surprise the market. The previous day, the stock was trading very quietly, boring. You can see the volume was very low. And then it came alive. And the reason it came alive is there was something that had a group of traders who follow this company closely excited. And they began to buy that stock aggressively. So in this case, we had an entry point of $2.04, and the bottom of that action candle is $1.99. We call that minus R1. So that's basically our risk. Now we may actually take our loss down here at -2 or something like that, but what I want everyone to notice is that this space here, if we extrapolate it higher, is what these green lines are. And those green lines represent reward for risk ratio. So at this point, we're up 3 times the risk. So if the risk was 5 cents a share, then at this point, we're up 15 cents a share. And over here, we were up 5 times, or 25 cents a share. Okay? Now that's 25 cents on a $2 stock, so that's a 12.5% move on this stock. But what's more important is the risk-reward ratio. By the end of the day, the stock was just under 5 times risk. And that's the important metric that we always want to keep in mind. Excuse me. Sorry, I have pollen allergies. I took some stuff, but apparently it's hitting me still. All right, so that is the risk-reward ratio. Now we're going to talk about my trading day. How does my day look? People always want to know what I do through the day. So I actually don't do much work before the market opens, maybe 5 minutes. I just take a quick look at what the overall market is doing. Is the trend of the overall market up or down? Are we going to open with a big move to the upside at the open, like a gap to the upside? Are we going to open down? Where is support and resistance? I do maybe a 2-minute discussion of that for my active trader members right before the market opens. Starts at, for me, 6:25 a.m. because I'm on the West Coast. And I make a little plan for the day, but it's not much of a plan. Some days we favor shorting. Most days lately, because the market's been trending up in general, we're mostly just buying stocks. Now, as I said, I'm a strategy-based trader, so I'm looking for different signals through the day. I don't do all of these things every day. My personal tendency is to focus on the day trader strategy and the simple swing. Lately, the superheroes has been working well, so I kind of had given up on that. Not given up, but stopped doing that strategy a few years ago. But in the last year, it's actually making a good performance. So I do that a little bit as well now. If it's a boring day, I'll do my wave strategy. But the wave strategy is a little lower margin in terms of how much money you make on each trade. It's something you can do on a slow day. But if there's action elsewhere, I'll focus on the day trader strategy or the superhero a little bit, and then the simple swing, which is a swing trading strategy where I will hold those positions for a number of days. So most of the day trader strategy signals will come in the opening half an hour, but I look all day long. So most of the signals come in the first half an hour, there are signals all day. Okay, and then the wave you can do after about the first half an hour. You have to wait a little bit for chart patterns to build. Superheroes, usually after the first half an hour, you might get one earlier. And then the simple swing you can do all day long, but most of the signals come in the first half an hour, even opening hour. The process is to really minimize human judgment. Then in the final half an hour of the trading day, I start to sort of exit my positions if I haven't exited them already. Some I will hold overnight. Just depends on how the pattern goes. Sometimes day trades will turn into swing trades. I've bought them as a day trade, but they look good going into the close, so I'll hold them overnight. Sometimes you have to make an adjustment for risk when you do that. But those are all things that I do. Now, for me, because I'm also teaching and guiding a group of my students through the day, is in the last half an hour, I answer a lot of questions. People can ask me about trades that they've made. I'm giving them feedback. I often get asked, should I have sold this? I'm not an investment advisor, so I can't tell people to buy or sell, but I can show you how to read charts and apply the rules that I've taught. And so I try to do that as well. So here is a trade actually from today, and this would qualify more as a superhero. And the reason is this stock was trading abnormal volume compared to normal, much higher. And it built a pattern here called an ascending triangle. When you take my courses, I'll teach you, I don't know, about a dozen different patterns. And then it broke out with one of those action candles right there. And it went for a pretty good little move there. It ended the day on a risk reward basis. I don't know if that's 15 or 16 times its risk. So that means for every $100 risked on this trade, it made $1,500 of profit. Now, I don't want anyone to be confused. When I say $100 of risk, that does not mean a $100 position. It could be a $6,000 position, but the risk, the distance down to where support was represented $100. And we, on this trade, probably would have been risking more like $200 or $300 to make $1,500. Or if you have more capital to trade with, more experience, it would be more like risking $1,000 to make $8,000, something like that. Okay, so that's an example of a superhero trade. This was from today. Another one from today. This is also kind of a superhero. It triggered my day trader strategy this morning, but I actually didn't really like the setup at that time. There's reasons for that. It had some resistance, and actually it got up to that resistance and got stuck. But then it broke out again, and it broke this pattern here, this little pullback line. So the better entry was here. But again, this is a superhero. It's trading abnormal volume through the day. My algorithms picked this up. And then when this pattern break happened at about 11:45, it went for a nice rip, moving probably 10, 12 RR from that point. So again, $100 risk makes about $1,000 to $1,200. We'll go through the economics at the end. I'll show you how you calculate the position size, the capital required, all of that stuff. I'm going to do that last tonight, so stick around because it's quite interesting to see all that. And then here's one more example. This also from today. This stock would meet the criteria of my day trader strategy. It has an action candle right here. It's breaking from low volatility, very boring sideways trading. Wasn't perfect, it lacked volume, but it still was pretty good. And this one moved up nicely through the day, finished the day at 7 times risk, which means it made 7 times whatever you risked. If you risked $500, it made $3,500. If you risked $50, it made $250. So what do you need to be able to trade the market? Remember I said that there have been millions of new traders in the market in the last year because of COVID. And I said that it's a little bit like taking candy from a baby for someone who knows what they're doing, because most people coming in didn't take the time to learn. Trading looks really easy. Anyone can open a brokerage account. Anyone can trade the stock market. There's no barrier to entry. And they let you. I think it's actually a bad thing to let people, trade the market without any knowledge, because they end up hurting themselves. We don't let people drive cars without getting a license. We don't let people operate on your heart without going to med school. But there's absolutely no barrier to entry to becoming a trader. And I will tell you that although trading is very simple, when you look at it, buy, sell, it seems really simple. It's not easy. And you need to have skills like anything. And so you need some basic skills like understanding the difference between the bid and the ask, understanding, level 2 screens, how to put in an order, and then more, technical skills like what is support, what is resistance, what does low price volatility mean? For me, what is an action candle? What is the risk reward ratio? You need to know how to analyze stocks, how to manage money, maybe how to develop strategies, the mechanics of identifying trades. Timing is everything. You might find a good trade an hour late, but you could be a dinosaur an hour late. You need to also have the tools and the process to find them quickly. And so all of those things are necessary before you start trading in the market. Now, I think it's important to have a strategy. going into the market and buying and selling stocks based on gut feel is probably going to make you poor. And I teach strategies. I love to develop strategies. It's my favorite thing to do in the trading world. And so I come up with a list of rules for when to buy or short, when to exit the trade, how to size positions, manage risk, the step-by-step process. And I've been teaching people those for 20 years. I enjoy teaching. I enjoy trading too, but if all I did was trade, I wouldn't have a whole lot of self-worth, I would say. And I mean, it gets boring sometimes. The market is a cycle of boring followed by lots of really fun action, followed by some boring. And so with teaching, I'm always kind of busy, and I like that. And I think I enjoy teaching, and people tell me I'm pretty good at it. So that's something that I'm willing to share with people, and it's not very expensive relative to what an education in any other career costs. If you like, my daughter got accepted to New York University, and it was $100,000 a year. So 4 years, that's $400,000. I don't think she'd be better off than having me teach her how to trade for 4 years. Believe me, I'm pretty sure she would make a lot more money coming out of school. So now we're working on that. I'm going to teach her how to trade the stock market. Those strategies should be well tested. They should be well understood. And we really use the power of statistics and math analysis, writing algorithms to give us an advantage in the market. Because most people are throwing darts at a board. Most people are trading on gut feel, on tips. And if you have a very mechanical approach, you're closer, you're competing better with the big money traders in the market who are entirely computerized. The Citadels, the Renaissance, the algorithmic trading firms, they've just got big racks of computers being programmed by PhDs to beat the market, and they beat the market handily. And they're taking money from the retail trader who doesn't necessarily know what they're doing. And I try to teach people to be more like that algorithmic trader. We have a little bit more of a human element than they would, but we also have an advantage in that we're not trading with billions of dollars, so we can be much more nimble, much more quick, and we can jump over the candlestick on the chart. So when I talk about using statistics, this is a big spreadsheet that I have. I update this every day. It's got the data for every stock that triggered an action candle that day. And I've got data going back, I don't know how far back, a couple of years, thousands and thousands of signals that have occurred. It's all computerized. It's all in these big spreadsheets, so I can analyze the data with a lot of market conditions and different values for the different indicators that I use. And so this is just a screen capture image of one of those big spreadsheets. I can then summarize the data, so I can say, okay, on the 15th of October, between 9:30 and 10, there were 12 buy signals. They had a maximum reward for risk of average of 2.91, a closing reward for risk of 0.04. And I can see at the end of the day, they average a reward for risk of 0.79. And that's with no human intervention. That's strictly just trusting the algorithm. And so we collect that data, and it helps us be better. And when I say us, I mean myself and the students I have in my active live service, because I make that data set available to my active trader subscribers. So what else do you need? You need tools. We talked last night about the Stockscores market scan tool, which is more for position trading. We use it a little bit for swing trading as well. For day trading, I use something called TradeStation. If you are in many places in the world, you can have a brokerage account with TradeStation, and you can therefore get their platform for free. I live in Canada. Canadians are not allowed to have brokerage accounts with US brokers, a little bit of protectionism. And so I have to subscribe to the platform. So subscribing to the platform costs $99 a month. It is the best money you'll ever spend because the platform will help you make more. It's just a great tool. Not all of my students use TradeStation because they can also watch my analysis screen and get the same signals without having to do the work. So TradeStation is an option For people that are comfortable using software and maybe a little more computer literate, I recommend it. But if you're not in that camp, then you don't need it. You can just run with the Active Live service that we offer because it does the same thing. And it's actually easier. You don't have to manage the software and run the processes because I have that all automated. Whether you use TradeStation or not to be a day trader, what you do need is some real-time charting program. So most active trader brokerages, so the Interactive Brokers, the TradeStation in the US, Questrade, TD Thinkorswim, there's a number of brokers that are a bit better for active traders. They all provide some sort of real-time charting program to their clients. If you trade enough, that platform will be free. If you don't do a lot of trades, and you might end up paying $30, $40 a month for it, mostly for the data feeds, because the brokerages get charged by the exchanges for their real-time data. If you don't want to use the brokerage platform and you don't want to use TradeStation, there are other platforms out there. One that many of my students use is called TradingView, just Google it. And they have pretty good charts. We actually have TradingView charts on the Stockscores website, but not in real time. And you can actually get a real-time version of that. It's quite cheap. There's something called TC2000, which is a pretty good program. There's a number of others. Those are two that many of my students will use. But many just use the one that comes with their broker, or they use TradeStation. Now, you also need a platform for order entry. So I use TradeStation for my analysis, but I enter my orders through the order entry platform from my broker. So I use Interactive Brokers. They've got a very sophisticated platform. It's pretty confusing. Tech support isn't great, so I don't encourage people that aren't really patient or a little bit computer savvy. If you don't come into that world, then Interactive Brokers will probably be quite frustrating for you. But if you're okay with figuring things out, and I mean, like I say, the platform has so many great functions. It's a bit of a mess in terms of how it's organized. So I have a hard time recommending it to a wide group of people, but if you're a little bit more nerdy, computer savvy, then it's going to be fine. We also like to do post-trade analytics. So I use Microsoft Excel. I showed you that spreadsheet. We're doing that every day. You should keep a trading journal of some sort where every trade is documented, why you bought, why you sold, where you bought, where you sold. You can just use an Excel, or a Word document for that, or a notepad, or anything like that. There are websites out there where you can keep a trading journal. I don't know any off the top of my head, but I'm sure if you Googled trading journal websites, you'd find something. I know a few of my students use those. I just don't remember what they're called. And then finally, we have at Stockscores, we have something called the Active Trader Live service, which I'll show you in just a second, where you can see my analysis. So you're seeing my TradeStation analysis in real time. Plus, I coach you a little bit for the opening half an hour, sort of guide you through there, try to teach something every day, pick a few stocks, things that I think look good. And then at the end of the day, I review the day as it was. I try to teach a little lesson. I answer lots of questions. If you have stock questions, what have you, that's when I answer those. You have to be a subscriber to that. And in order to subscribe to Active Trader Live, you have to be an active trader student of Stockscores. And we'll talk about that in just a moment. Then, of course, you also need process, that step-by-step plan for implementing the rules. The rules are useless if you don't do them fast enough. And last night we talked about my investing process, and the day trading process isn't a lot different, but what is different is how quickly you have to do it. When you are picking your stock trades for longer term, you can do that in the evenings, you can do that on the weekend, you can drink a glass of wine, eat some cheese, think about it for an hour, debate it with your wife or husband. Its timing is not that important. When we're day trading, we have to make a decision in a few seconds. And so you have to have a very mechanical process. You have to have powerful tools. You have to be efficient. You have to keep your emotion out of it. It's very easy for your fight or flight response to get triggered when you're day trading, less likely when you are investing. And so process becomes very important with day and swing trading. So what is the process? Well, we start the day with a look at the market factor. And again, the market's been generally trending higher for quite some time, since last year about this time. So we haven't really been doing that much lately, but usually we will try to determine if it's a day when we want to focus on the longs or focus on the shorts. And then we have the algorithm, the software, scanning the market for Stockscores action candles. I'll show you what that screen looks like in a second. And so my algorithm is looking at every stock in the US, and unfortunately, TradeStation only covers the US markets. It doesn't cover the Canadian market. So for day trading, the Canadian market's a little tricky because the tools just aren't there. So I generally, for day trading, focus on the US market, although for longer term trading, I'll focus on Canadian stocks as well, because I am in Canada and I have a lot of Canadian subscribers. But my approach for day trading is primarily focused on action candles on the US market. When we get one, we assess the stock to make sure it fits the other rules, and then we enter the trade. Once we've entered the trade, shortly after, we'll put our stops in, stop loss point. So if the stock falls down too far, we get out, we take our small loss. And of course, I teach you where to put those and that sort of thing. And, then we're just monitoring for an exit signal. If the trade is working, if it gets up above 5 times its risk, we start to look for exit signals. If it continues to move higher through the day, we just hang on to it until the end of the day. Sometimes we'll even hold those trades overnight. We've been doing that more so lately because that's been working well. And a day trade then turns into a swing trade. We might hold it for 3 or 4 days. Now, throughout the day, we're always sort of watching the S&P 500 to see if there is a change in market direction. The S&P 500 is a major index. It represents the 500 largest companies in the US, well, really in the world, but on the US markets. And so we monitor that just to make sure that the overall market is not giving us a negative signal of some sort. But as I said, the Active Trader Live service automates much of this process for you. And again, I will show you how that looks in a couple minutes. Now, something else that you need, of course, is capital. And we're going to talk about the economics of trading at the end of this presentation. But generally speaking, whatever your risk tolerance is, in order to day trade, to take a few trades a day, you should take that risk tolerance and multiply it by 200. So if your risk tolerance is $50 a trade, then you need about $10,000 of capital. Now, this varies a lot. In the last year, it's actually been quite a bit lower because we've had a lot of low-priced, small-cap stocks making big moves. So you've needed far less capital in the last year than you would normally because we've had $2 stocks go to $8. We've had GameStop go from $10 to $400, and they're very volatile. But generally speaking, I just try to give this rule the most sort of conservative way to look at it. Take your risk tolerance, multiply it by 200. That will allow you to buy 3 to 5 stocks a day and make it worth your time to be trading. Now, when you start trading, let's say you take my course, you go through the material, you're gung-ho, you're ready to go. Start with $0 of risk. I tell all my students this: start with no risk. Simply practice either in an Excel spreadsheet by plotting your trades, or I have another website called tradescores.com where we have a simulator. You can practice trading with the simulator. It measures your performance and reward for risk. So practice first. And once you're successful in your practice environment, there's no emotion in practice environment, so it's not totally realistic, but still it's pretty good. And if you're successful in practice, then you can start trading with risk. Now maybe trade with $50 of risk per trade. And if you make $500, maybe up your risk to $100 per trade. Once you've made $1,000 at that level, maybe up your risk to $200 a trade. And if at any time you lose what your profit was coming in, then drop your risk down again. So if you made $500 and then you lose $500, go back to $0 of risk and practice again. Because our number one goal is capital preservation We want to try to use the profits we take out of the market as our risk capital to maintain that initial stake of capital. And so I encourage all of my students to follow this process. The stock market is here forever. I know we all want to make $1 million next week, but there will be things that the mistakes you make by having never done it before. And why make those mistakes cost a lot of money? I don't care if you have $1,000 to trade with or $10 million to trade with. Start slow, get your skill, get your confidence, get fast, get your process down, and then slowly increase your risk. And the other benefit of that is you're slowly desensitizing yourself to risk. And that is important because the great enemy in trading is overcoming emotion. And if you can't overcome emotion, then you're going to have a tough time. Now, what will help you succeed? As I said a number of times, trading is simple, but it is not easy. So you need to walk before you run. You need to practice. You need to have good focus. I think you need to like it because it's going to take some determination to be good at it. It's like anything. If you want to learn how to be a good skier, you have to enjoy it so that you go out there and you crash a few times and you get yourself up and you keep doing it. That's how you learn to do something. Trading is no different. If you want to be good at it, you have to put in the time to practice and get good. It takes discipline, emotional control. Don't be a gambler. As I said, gamblers can make lots of money in a hot market, but they'll give it all back when the market turns ugly. Now, if you want to become a day trader, and which is primarily what I do, then you need to think a lot about your process to get there. So as I said earlier, it took me about 8 years before I was successful, consistently successful. And I can generally really shorten that time period for most people. If you want to learn from me, I'll teach you my rules. I teach it personally. I don't have a bunch of staff teaching it. So you're going to learn from me and my 30 years of experience. And we do the teaching through the Stockscores Education Center. I showed this last night. I'm going to show it in more detail on Saturday. And so because we're running out of time a little bit here and I want to do some other things still, I'll just give you the high points and make sure you check in on Saturday's webinar because I'll go into a lot more details about what the Stockscores Education Center looks like. But essentially, we have 3 core areas. There's the foundation area, which is the theory. And then we have the investor area, which are the investor strategies. And then we have the active trader area, which is the day trader and swing trader strategies. Now, the investor course teaches my investor strategies. There's 5 or 6, 4 to 6, I don't know. There's a number of them. And some of them take 15 minutes a day. Some of them take 15 minutes a week. But none of them are too time consuming. You generally use the market scan to apply these strategies. With the course, you get 6 months access to my tools, which you can renew for $300 a year. And as long as you're my student and a member of Stockscores, you get email support from me as well. Now then we have the active trader course, which includes the investor course. It gives you the foundation lessons, the investor strategies, but it also gives you the active trader strategies. It gives you access to the investor and active trader market scans. Still get email support from me, still get the tools. But the most important 2 things are at the bottom. You get access to my real-time indicators for TradeStation, and it makes you eligible for the active live service. Now, what is active live? Well, this is where you can watch the automated processes that create and monitor the market for day trades. It's real time, live webinar done every day. It's all automated. I got really powerful computers running. And so you don't have to go out and buy the powerful computer. You don't have to have TradeStation. You don't have to know how to do the process. You don't have to have the computer skills to build the automated processes that run. It's all done. You just watch the screen, the same screen that I watch. You're watching it as well from wherever you are. And I'll show you the screen in a second. But this is only available to those who have done the Active Trader course. Now, you could do the Active Trader course this week and be on Active Live in May. This is how it looks. This is what the screen that you watch looks like. And you will see a number of windows. These are called radar screens. So this radar screen here is for swing trading. It's giving us the real-time alerts. So we can see that TYHT gave an alert at 11:53 Eastern Time. And at the end of the day, it was at 8.4 times its risk. It had a maximum reward for risk of 14.4. This is a screen that helps with day trading. It shows us how abnormal the volume is, how liquid the stocks are. It shows where there's a 1 here. It means that stock is breaking some resistance, which makes it a higher quality. This list is our day trader list. And so Dish Networks triggered an action candle at 9:40. It required $19,500 of capital, which is fairly capital intensive, more than most. But you can leverage that 3 to 1. So take that number and divide by 3. And the entry price was $37.57. To take $100 of risk required a position of 520 shares. And at the end of the day, that trade was up 17.6 times its risk. So $1,760 for $100 of risk on a trade that would have required about $6,500 of capital. So making a $1,700 profit on $6,500 of capital. That's the economics right there. That's what I was talking about we would go through tonight. Okay. Then we have our wave signals here, and we have our shorts here. We have a chart of the S&P 500 there. Now we have one other program that I normally only do once a year, but this year I'm going to do it twice because there's just so many requests for me to do it again. I only teach 20 students at a time with what we call the mentorship program. So the mentorship program, just very simply, is me taking you through the material one step at a time. We do 14 online meetings. Each meeting is about an hour. And I'm just going to walk you through the material one lesson at a time. Hold your hand. I call it the procrastination solution. So if you need, a bump, a little push every week, we typically would do one lesson a week. Usually it's Tuesday nights, but we're actually going to do some weeks this time. We're going to do 2 because I want to try to get it done before July. I know that come July, August, people want to, go to the beach or do whatever. And so we're going to do 1 or 2 meetings a week from the start of May until the end of June. And you'll learn the material with me as your guide, as your coach. Is it more, you're not going to learn more than you learn in the Active Trader course, maybe a little bit more in depth, but it's the same strategies, the same concepts. But the people that take the mentorship always tell me it's just a way easier way to learn it. But because there's a lot more hand holding and I answer a lot more questions sort of during these webinars that I do every week, I have to limit the number of students. Otherwise, it just gets too overwhelming for me as your teacher. So it's limited to 20 students. There are currently 6 spots left. I can tell you how you sign up for that in just a moment. And it's really targeted at those who want to be an active trader. So if you want to be a day trader, a swing trader, that's the real focus of the mentorship. We do 1 class on longer term trading, but most of it's on active trading. How to use TradeStation, how to analyze data, all that stuff. So twice a year, I complement the material that's in the Stockscores Education Center with some live training. And so I'm going to take my students through the theory for 2 days, Monday, May 3rd for an hour and a half, 6 till 7:30 at night, Pacific time. And then Tuesday, May 4th, again, 6 till 7:30 Pacific time in the evening. And we'll just walk you through the theory. Then the following 3 days, we're going to apply the investor strategies to do some market scans. So we'll spend about an hour each night going through scans, practice reading charts, just applying what you learn in the course. Now, the other bonus that you get if you do the course now is for the active trader students, for those that take the active trader class, you'll get a free month of active live, which you can use anytime. So if you want to, study the material through the end of April and then start in May with active live, you can do that. Many will say, I'm going to start in September. I want more time to learn before I start using active live. There's no limit. You can use your free month a year from now if you like. It's up to you. All of these classes, these live classes, are recorded, much like tonight's webinar has been recorded. And you can watch them again and again and again. The mentorship classes are all recorded as well. They are usually Tuesday nights. Some will be Thursday nights from 6 till 7 Pacific time. And I've got a couple that will be Saturday mornings, just because we have to get through the material before summer hits. We're going to do 1 or 2 classes a week, either Tuesday night and Thursday night, or Tuesday night and a Saturday morning. I've got a full schedule. If you're considering it, I can email you the schedule. All right, so the special offer that we have open until Friday, April 30th at 11 p.m. is you will get those live classes, the overview class, the investor market scanning classes. You will get those for free. If you took the course, you bought it online last month, you'll get it for free as well. Don't feel like you're missing out. Anyone who's taken my course since the last time I did it, which was November, until now, you'll get all of this stuff for free. But the deadline for this round is Friday, April 30th at 11 p.m. Okay, course pricing, $24.95 for the investor course. These are all Canadian dollars. I know we have lots of people in other places in the world, so this is Canadian dollars. Active Trader, $34.95. And Mentorship, $54.95. And if you've taken the investor course in the past, you want to upgrade to Active Trader, you can just pay the difference, $1,250 is the upgrade fee. And to upgrade from Active Trader to Mentorship is $2,000. I will talk more about these things on Saturday, but you can sign up anytime. What I'm going to do now is just launch a poll. If you want a follow-up email between now and, I don't know when I'll send it out, maybe now and Monday, just with a little bit more details and sign up and sort of summarizing the offer, you can just answer this poll with a yes on what you're interested in, and I will send you a little bit of follow-up information. If you don't want me to bug you, then just say no, I won't bug you. Now, last night I forgot to turn this screen off, so I will hopefully remember tonight, but I'm going to give it another 10 seconds and then we will just do the economics of trading. I wanted to talk a little bit more about that just real quickly. Okay, we'll close the poll in about 10 seconds. All right, so if you've answered that, thank you. If you're watching this as a video and you want a little follow-up information, try to watch or join the webinar on Saturday, because I can sort of answer some of those questions. So I talked a little bit about reward for risk, capital required. I just want to go through that one more time. This screen, the active trader screen, I know it's a little bit small and hard to read, but if you have a larger monitor, it's a little bit easier. But let's just pick one of these and I'll just go through the economics of it. So I have to just go here and sorry, I'm having a little trouble getting my drawing tool to work. Just bear with me for a moment here. Okay, so which one should we do? Let's do SKLZ. That was one of the examples that I showed earlier. So SKLZ, so how do you read this? First of all, it traded 318,000 times today. That's very liquid. That's a really actively traded stock. The action candle was at 1144. That's what that column means. Now then you can see the entry signal price was $14.92. In order to take $100 of risk on SKLZ, you would buy 430 shares. Now 430 shares times $17, oh, not 17, it was, the entry was $14.92. That means the capital required is $6,416. Now, when you day trade with a broker who is more focused on active traders, they will let you leverage that 3-to-1. So if the position size is 6,416, divide that by 3, you'd have to put up about 2,100 and let's call it 20. Yeah, let's call it 2,150, $2,150 of capital. I'm rounding off. So you need to have $2,150 of capital to take $100 of risk. Then the next thing I want you to notice is right here. The closing risk reward ratio was 7.9. So that means it made 7.9 times its risk. So if you risked $100, you put up $2,150 of capital. At the end of the day, you could exit that for somewhere around 7.9. There's always some slippage. So let's call it 7 times risk. So you made $700 on your $2,150 of capital. So roughly a 30% return on your money for the day on that day trade. So that's just the economics of an individual trade. Now that's a pretty good trade. These ones were the really big movers today. And then we have some that only made 3.7 times. And lots of these weren't even valid. You know, lots of those signals that came up when we look at the chart, they didn't have the right kind of chart pattern. So you wouldn't take a lot of those, but SKLZ was actually a pretty decent setup. All right, so that's a little bit about the economics and how that works. There's my email address. If anyone has questions, I'm going to answer a few questions quickly, but we've actually gone a little bit over time, so I will just have to zoom through the questions a little bit. But let's just see what has been asked. Why did you quit trading futures? And what do you think of the new micro futures? Honestly, I found the futures market hard to make money in, plain and simple. I don't know anything about micro futures because I just haven't looked at that stuff anymore. I did so some people had some sound problems, and I apologize, but every time I do a webinar, 1 to 2% have some issue with sound, and sometimes just logging out and back in again will be good enough. Is QuoteStream okay? Sorry, I don't know QuoteStream, so I can't give you much of an opinion on it. Am I trading under a corporation? Yes. Would you be able to share your tax strategy? I don't really want to go into that because I'm no tax expert, and I don't want to give out tax advice when I don't really know what I'm talking about. If you are a pro trader, if the government declares you to be a pro trader, which is what I am, it's your primary occupation, then you're not going to be able to get the capital gains exemption. And therefore, it makes sense to trade in a corporation because the dividend tax rate is lower. You can grow your money in your corporation. There's a lot of reasons for that. I might try to touch on that a little bit more on Saturday. As Canadians, how do you reduce the effects of trading fees on your profits? You know, I trade through Interactive Brokers. The fees are pretty low. Honestly, if I'm worried about whether commissions are $5 or $7, then my strategy is not very good. And so commissions for me aren't really an issue. I pay lots every year in commissions, but it's not an issue because my strategies are effective enough that I don't have to worry about the commissions being a big factor. I'm just scrolling through some of these. And what time is the May 11th mentorship class? That one's at 6 o'clock. Most of them are at 6, sometimes Saturday morning at I think 9 or 10. Does your program trade crypto, commodities, options, or just stocks? I just trade stocks, but many things that you've mentioned can be traded with my method. You can trade crypto through some of the ETFs that represent crypto, same with commodities. But you can apply what I teach you to those other areas as well. Many of my students use options. I use a big bank direct investing service, which is a 50 million. What other broker can you recommend for US and Canadian? So I did a little survey of my students, and their ratings, which I compiled, was their number one rating was for Interactive Brokers. Number two was, I think, Thinkorswim from TD Bank. And number three was Questrade. Very informal survey, but one day in our active live, I just asked people, and that's sort of how the scores came out. Do you think UVXY is good as insurance for a coming market crash? Not really, because it deteriorates in value every day, so you really have to time it well. If the market is crashing at the moment and you get into it at the right moment, yes, it will go up if the market goes down. But to buy it today waiting for a crash to happen, I think is a bad idea. Some of these things some of the questions I'm reading here I've touched on, so I'm going to assume that you got your answer from my conversation. Do you look at Stockscores to check the chart pattern on your live screen? Depends what I'm doing. When I'm position trading, I always use Stockscores. I like the charts better. If I'm day trading, I'm using TradeStation. Do most of your students make money and become successful traders? It's like, do most people that get gym memberships get in shape? You know, if you work hard and you're determined and you do it, you get in shape. If you do what I teach you to do, I'm confident that I can make you into a successful trader. I've got lots of students that are successful traders, and I've also got some that gave up because I don't know why, they didn't like it or whatever. It's the reality of anything. There's people that go into law school that drop out of law school. There's people that want to be doctors that end up not being doctors because they change their mind, you know? So there's no magic. It's not like there's no catch or secret. It's just do the work. I've been doing this for 30 years. I've got a lot of knowledge that I pass on to my students. If you want that knowledge, you can buy it from me, and that's up to you then to do the work. And I'm there to support you. I'm there to coach you through it. But if you don't ask questions, I can't help you. Is this system of trading stocks easier than options trading? I would say it's simpler, yes, because options trading has many different dimensions. You don't only have to be right about the direction of the stock or whatever you're trading the option on. You also have to be right about the time value and understanding the intrinsic value of the option, that sort of thing. So options trading is more complex, but it gives you leverage, which for some people with less capital is beneficial. I've traded options a little bit, but I don't need the leverage, so generally I don't. After the free month, what's the subscription fee for Active Live? It's $195 a month for Active Live. I will touch on that more on Saturday. I'm going to wrap up now, but I encourage all of you to join me on Saturday because I'll go into a little bit more about what's in the course material and answer some of that stuff, and hopefully answer some of those questions you have about the course as well. You can register for the course at any time. You can do it tonight. You'll have instant access. But if you want to wait till Saturday to get some more of those questions around my courses, around my tools answered, by all means, you have until April 30th to take advantage of that free offer. All right, so I'll wrap it up there. Thank you all for joining me tonight, and hopefully we'll see many of you on Saturday at 10 a.m. Pacific time on Saturday. Thanks, everyone.